What up, YouTube fam? It's your boy Jamal tapping in once again. Today, we're going to talk about no PG funding. This is real business funding that we're going to be talking about today. All right. The great thing about this is that you have several options, whether you're a startup and if you're an established business. Of course, established businesses are going to get more money, but it's absolutely possible to get some funding even as a startup on the no PG side. We're absolutely going to dive into it. Remember to like, subscribe, and share this with any other business owners that are looking for different ways to get funding for their business. So let's start up. Let's talk about some startup friendly options. But some of the startup friendly options include, right, vendor accounts. And you may have heard of this with business credit. You heard of vendor accounts, things like Net 30, Net 15, Net 55. These are a great way to start building up credibility for your business, especially when you're new. Okay. The great thing and the reason for that is because these vendor accounts, most of them don't, in the beginning, they don't really have like a age requirement because they're broken down into tiers. You got tier one. Tier one, they're great for rebuilding. That's where you hear Uline, Granger, Quill, the creative CEO, Credible on the business side, Credit Strong on the business side. These accounts are perfect for startups because they don't require any level of age in your business. You sign up, you're going to pay a monthly revolving fee, or you're going to either a monthly revolving fee or you're going to make multiple orders, whether it's 2 3 orders. Each organization is a little different, and then in like 60 to 90 days, boom, you're going to get that paydex 80 score. You hear about that paydex 80 score a lot because it's one of the ways that vendors track your credibility as a business. These do not require any kind of personal credit check whatsoever. You don't have to do a personal guarantee or anything. All you have to do is make sure your business is established with the state, have your EIN number, and have a Dun and Bradstreet number. From there, you can start building up your tier one. Once you build up your tier one, that's like 5 accounts. Next, you're going to go to tier two. Tier two, that's when you can start getting credit and credit cards from stores. That would be like Home Depot, Lowe's. The Sam's Club card is very popular right now. A lot of people know that you can get the Sam's Club card with absolutely no PG. Even I've seen people get $20,000 on that card. Thing with that is, for the most part, you can only use it in the store that you get the credit from. So it's not general cash purpose kind of credit, but it still qualifies as funding because, I mean, what can't you buy at Sam's Club? You can get gas, vending machines, pretty much whatever you need for your business, right? If you have a cleaning business, right, you can get all of that from Sam's. Costco has a business credit card as well that you may be able to apply for without an EIN, but that's underwritten by Citibank. So actually, I'll take that back. They're going to want a PG because it's underwritten by Citibank. After you build out your tier two, all just no PG, you then go to tier three. Tier three is those include more gas cards. So now we're looking at fleet management cards like BP gas card, Shell gas station, AutoZone, think those type of cards and accounts. Next is the final tier. This is the tier. Y'all remember, let me know. Y'all remember when they were talking about, oh, you can get a car in your business name. It's a tax write-off. You can write off your lease. You can write off your insurance. The 6,000 pound rule, all that good stuff. But no one really told you how to get a car in your business name. Well, that's how you get one. You have to build up your business credit to the fourth tier in order to get a car in your business name. So you're going to need about 10 about 10 trade lines reporting on your business credit in order to get a car in your business name. Depending on who's doing the underwriting for that vehicle and for that auto loan, you may need to be in business for like a year, right? So Ally is very well known for doing business auto loan financing. So is Bank of America. And they're relatively startup friendly. I would highly recommend, especially with Bank of America, start a relationship with them first. And if all of this is new to you and you're like, I don't understand this vendor credit, I don't even know how to set up a business to get to the point of even getting no PG funding, like what is an LLC, all of that, then what I'm going to do right now is I'm going to drop the link to my ebook that actually tells you how to do all that. So if you're listening to this, you're new, you've been scouring the streets, or if you're an established business owner and you had no idea how to build up your business credit because you done wasted money on vendors that didn't do anything for you, you can avoid all that. In this ebook, I have about 50 different vendors that will actually report to your business credit. That would be Dun& Bradstreet, Experian Business, and Equifax Business, all three of them. And that will allow you to build up the tiers to the point of getting real estate and cars solely in your business name with no PG. That is all startup friendly business credit. So yeah, everyone got that? We good on that, right? Business credit like that with the vendors, net 30s. Now, there's a love and hate relationship with the net 30s. Some people praise it, say it's the most wonderful thing ever. Other people are like, it's a waste of time and it's a waste of money. And it really depends on your type of business and what your particular goals are. If you literally are just trying to get as much money as humanly possible, as quickly as possible, then yeah, vendor credit ain't really it, because it's credit that you can only use at that store. You don't get to the point of getting like unsecured EIN only business credit until you have like multiple years in the game, and we're talking about having 10 or 15 trade lines on your business account. At that point, that means you've been paying 10 to 15 businesses on time for over a year. And then the business has shown a long enough track record where it can kind of like stand on its own as its own entity. The other part, and I'll talk about that a little later, is when your business reaches a certain level of revenue. That's when you can really do straight up no PG, because the business is old enough and it's strong enough to that you're able to just get funding as a corporation. But net 30 accounts, they're still great even for a startup. The next type of no PG funding we're talking about, right? And again, if all of that, what I just said, was like a mad scientist, you're like, I don't know what the hell this dude is talking about, grab the ebook. It's too many. We're doing too much thinking about things, planning, no action. Take the action. Get a guide that's going to tell you exactly what to do and in what order to do it. That way, there's no guessing. You don't need to guess, because guessing when it comes to building up business credit can cost you a lot of money. You can end up wasting two, three, four, even $500 because you invested into the wrong type of trade line, or you thought that doing business with a certain company was going to help build your business credit, and it didn't do anything to build up your business credit. So make sure you grab that. Next, this one is semi startup friendly. Semi because your business needs to be established and you're going to need at least 6 months in business. This is revenue based financing. Revenue based financing is dope because there's absolutely no credit check. Zero. They don't even care. Only thing they're looking at is what's the volume of transactions coming through your Stripe account or coming through your payment processor. That's it. And they're going to give you a loan based on what they see going through your Stripe account, not even your business bank account. Now, of course, you got to have this connected to a business bank account, y'all. Like that's 101. I shouldn't have to say this, but absolutely, even if you've been operating as a sole prop, whatever, get you a business bank account. You are going to like this whole no PG thing is dead in the water if you don't have the basics. All right. You absolutely must have the basics. You absolutely must have a business bank account because that's the only way you're going to run it. Okay. So with revenue-based financing, they're looking at the credit card transactions that your payment processor is handling on a monthly basis. They evaluate this every single day, and they are going to offer you a loan based on how much revenue they see going through your business. Now, they're going to be looking at it. You need about 6 months with a particular payment processor, 6 months of transactional history for them to be able to gauge how much money they can give you. That's why I said it's not exactly startup friendly. But I mean, 6 months isn't a lot of time. I mean, shit, we already in June, damn near in the middle of June. It's already the 6th of June. That's crazy. So after 6 months, your payment processor will start to send you emails about different offers you may qualify for. And it's typically about 10% of what they see going through that account in the form of credit card payments. This is any payment processor that will do this. So your Stripe, your Square, PayPal, Authorize.net, I believe, also does it, right? Any of them will start giving you offers just based on having that revenue come through. That's why it's revenue-based financing. Then what will happen is the cool thing about it is that there's no credit check for this, none at all. And then you don't have to think about a payment plan because most of them are going to take their percentage out of every sale after you take the loan. So for instance, let's say you qualify for a $5,000 loan from Stripe. Stripe typically has a 20% fee. And what they'll do is they'll give you the 5,000 up front. You know, you're going to run it. You're going to use it for your marketing. Maybe you need to hire a closer or a salesperson. Maybe you're going to use it to run ads. You're going to get those new sales in. As those new sales come in, Stripe is going to take 20% of every sale. That 20% automatically goes back to paying off the account. This works great for high cash flowing businesses. So if you're a lash company, a lash salon, a hair salon, if you're a barber and you accept payments on your phone, right, through the Square, the Stripe, the little joint that plug into your phone, this is great for you because it automatically, boom, takes the money. No credit check whatsoever. Now, the last one is not so startup friendly, but it allows you to get access to 50, 60, 70, even $100,000 as an established business. Now, with this one, you're going to want to be in business for a year. You're going to want to be having revenue, seeing or showing revenue of about, I would say on the low end, $10,000 a month. This is so that you can get maximum funding, about $10,000 a month. And they're going to want to see 3 months of your bank statements, your business checking account bank statements. because they want to see the money going in and out of the account. As long as you're 1 year in business, you got 3 months of bank statements with cash flow, you can qualify, or you can at least submit an application to see if you qualify with no hard pull. It's a soft pull on your credit. And the great thing about it is that you don't need perfect credit for this. Is they'll do a soft pull, and even if you're as low as like a 620, a 650. Oh, another scam with the random weirdo. It's always unfortunate when people don't understand how lending works and all the different ways of getting access to capital. Like, it's really sad. It's really sad. It's unfortunate. Yep. So this is great for a lot of businesses. This is great for restaurants. If you're a restaurant, if you're in a brick and mortar and or a high risk industry, this type of funding is absolutely great for you because it gives you immediate access to cash. You don't have to do a vendor account, meaning you don't have to build up the different tiers. You don't have to try and liquidate any type of credit cards. You don't have to have absolutely perfect credit. You don't have to put up collateral. As long as your business is a year and it's cash flowing, positive cash flow, right? You'll be able to qualify for funding. Now, with these particular lenders, they call this alternative lending. And it's alternative lending because it's typically for business owners who don't qualify for traditional banking. Y'all probably know as well as I, with traditional banking, what they want to see. They want to see everything. When you go for an SBA loan, they're going to want to see tax returns. They want to see your personal financial statement. They want to see the tax returns of the business. They want to see P&L sheets. They want to check your business credit. They want to check your personal credit. They want to see all of that. And in some instances, you have to be in business for at least 2 years before you qualify for the SBA. For those who don't have all of that together, having a revenue-based financing, or this is called a merchant cash advance, these allow you to get quick cash infusion all the way up to 100% of what your revenue is. So right now, for instance, I have a client who's a restaurant owner. He owns a restaurant in DC. They're doing about $80,000 a month. But as a business owner, you may have revenue that's $80,000 a month, but your expenses may be $65,000 a month, which leaves you very tight margins because you still have to pay yourself, take care of your family, your bills, things of that nature, right? And emergencies pop up all the time. Stuff breaks, you got to get shit replaced, all types of things happen, right? And so, and his credit is not great. It's not great, and that's totally okay, right? It happens. It's an unfortunate part of the process. And with him, he needed quick cash infusion. He needed cash within about 2 weeks. So with his particular situation, he didn't qualify for traditional lending. The vendor accounts wasn't fast enough, and he already had some revenue financing. He needed more money. Okay. So we went and we looked at some alternative lenders, right? And we were able to get him a loan for $80,000. $80,000. He has 12 months to pay it back, and he has to make payments every 2 weeks. With these type of loans, the interest rate is going to be a little higher, but that's because they're not checking your personal credit. They're basing everything off of the strength and the finances of the business itself. So for the lender, it's more high risk. So of course you got to pay to play with some of these things, right? The great thing about these type of loans is that there is a lot of flexibility, and you can combine all of these different type of no PG funding routes in order to get access to the capital that you need. You can get revenue-based financing from your payment processor. You can get vendor trade line accounts if you need like uniforms or cleaning materials or office supplies, things of that nature. You can get that from a Staples, Office Depot, all day, every day on a vendor account. And then when you really need that big cash infusion, but let's say your personal credit isn't in the best position, maybe you got some charge offs or collection or something of that nature, then you have that merchant cash advance that can get you 50, 60, 70, 80, up to $100,000 in immediate cash without doing a hard pull on your credit. Some of them don't even check your credit. This is for my more established business owners. You have to be in business for 1 year, and they're going to be looking at 3 months of your bank statements. Okay. So if you're a business owner watching this, you're looking at that as an option. You can click the link that's pinned at the top. That's actually going to take you to a page. You just fill in your information. It is an affiliate link, 100% an affiliate link. But if you're in that position where you're looking for cash infusion for your cash flowing business that's over a year old, and you have a legitimate business bank account and you're looking for funding, click the link, type in the information. Someone's going to reach out to you to see if you pre-qualify. There's no hard credit pull on that whatsoever. Okay. Also, they have multiple programs for you. So if you don't like one offer, you can always ask them to adjust it and get you something better. It's just that simple. All right. I like revenue-based financing. Out of all of these, I think I kind of like revenue-based financing the most because it's the easiest to understand. I'm going to set up my Stripe or whatever account I may have, and it's great for e-commerce because I'm going to get my loan. I'm going to be able to use it, and then I don't have to think about monthly payments. I don't have to think about daily payments, monthly payments, bi-weekly payments. All I have to do is just keep focusing on getting sales in. And as long as sales come in, I'm going to be able to pay them back. And the great thing about that is as you reuse it, it increases, right? The amount that you can access increases. That's similar to a merchant cash advance because as you continue to use them, the terms get better. You may start off with having to make a daily payment, which is crazy. I understand that. And then over time, it may get better. It'll turn into a monthly payment. And the interest rate is going to drop over time because now you have that relationship with them and they're more willing to give you better terms. They already know that you can pay them back. They already know that you can pay them back and that you're good for it. So that is always a good thing to show that you're trustworthy. You're always going to get more by showing that, right? 100%. Welcome, everybody. My name is Jamal, Credit Protector. Everyone that's just tapping in, let me know where you're coming in from. Today, I was talking about some no PG funding, whether you're a startup, so you just getting started, or you got a couple of years under your belt and you already are cash flowing. There's 3 ways that you can get funding for your business with no PG. The first one is building up your business credit. This is startup friendly because you have tier 1 vendors that will issue you credit brand new, fresh out the box. You can make a LLC today and then go to a company like Granger and get credit. Now, their credit is an invoice. You're going to order something from them. They're going to give you, maybe they may give you 7 days. They may give you 2 weeks. They may give you 30 days to pay them back. But anytime someone gives you something before you pay for it, technically that is credit. So these are vendor accounts that you take, you rebuild, not rebuild, you continue to build them up. So you have the first tier, that's Granger, Uline, Quill, um, Business T-Shirt Club, E-Credible, Credit Strong. Who else? The Creative CEO. You can actually use any of those to build up your tier one on the business side. This will give you a Paydex 80 score. Yeah, this will give you a Paydex 80 score in about 90 days. Once you're there, you're ready for the next tier. That's when you start getting into more advanced store credit. We're talking about Sam's Club. We're talking about BP gas cards. We're talking about 76 gas cards. We're talking about 7-Eleven. Yes, 7-Eleven also has store credit, right? You'll keep working your way up to Office Depot, Staples, where you can start buying office furniture, printers, ink, all that good stuff on business credit. And then we go up to the final tier when we're talking about getting access to auto loans via business credit. So being able to get an auto loan strictly on your business from Ally or Bank of America or Ford or GM or even Mercedes Benz as a business. Typically, you're going to want to need to have 10 to 12 business trade lines on your business credit to get access to those no PG auto loans. Y'all probably seen it back in 2020. Everybody was talking about, oh, get a car in your business name, get a car in your business name. Nobody was telling you how to do that though. You got to build up your business credit, 10 to 12 trade lines. Then you can go walk into a dealership, tell them you want to finance this car as a business. Then that auto loan is a tax write-off. The car is a tax write-off. Or if you're doing a lease, the monthly payment on the lease is a tax write-off, right? And the debt, meaning the actual auto loan itself, does not appear on your personal credit because everything is based on the strength of the business. So you're like, well, damn, how do I build that up? Click the second link. My business credit ebook is going to show you how to build up your business and your business credit from literally not even having an LLC all the way up to being able to finance a car. It gives you every single vendor at every single tier so that you'll be able to get your car in your business name legitimately, legit. All right. Not some weird backdoor scam, weird. No, none of that shit. Just really build an LLC, get registered with the state, get an EIN number, get your DUNS number, build up the tiers. Boom, you're good. The next way, which is a little more startup friendly, little less startup friendly, but still startup friendly. I'll explain. Is revenue based financing. With revenue based financing, right? That's when you have a payment processor that accepts credit cards. As you run your business and you're accepting these credit card payments, after 6 months, the payment processor is going to be like, oh, okay, you're doing about 5,000-6,000 a month. We see you. We see you. Okay, we see what you're doing here. Okay, cool. So what we're going to do is we're going to offer you a loan based on your revenue. We see the swipes coming through. Bam. We want to offer you some money to help you scale up your business. Maybe you need more people. Maybe you need some money for some new tech. Maybe you need money to take some photos for the photo shoot to advertise a new product, right? Marketing. Or maybe you need some more money to run some ads, whatever it may be. They're going to offer you a loan that's about 10 to 20% of what they see as your monthly revenue. The great thing about this, there's no credit check for this. Zero. Absolutely no credit check whatsoever. All they're going to do is look at how much is coming through, make you an offer. Once you accept that offer, they're going to double check your business. They got to make sure you're legitimate, and then they're going to deposit the money to you. You don't have to worry about any type of monthly payment, no type of pay schedule, because all they're going to do is take their percentage out of every sale that comes through. They're gonna it's like 20%. Each payment processor is a little different, so always read the terms and conditions. But they're gonna do about 20% of what comes through, right? And then you keep the rest. That's how that's gonna go. And this works great for. I have a friend who does a big affiliate business. He uses it. He loves it. He's done it like at least 6 times already. I have another client who we use this for her. She does hair and lashes. She used it. She uses it a lot. Um, and a lot of ecom uses this credit cards and ecom, right? No PG. The last one is for my more established businesses. You've been around for a year. You've been around for a couple of years. You're doing 10, 20, 30, 40, 50,000. This is very, and these type of numbers are traditional if you have a restaurant, if you're in trucking or transportation, if you're doing government contracts, right? Or you're doing something like hauling for the government, where you have a lot of big ticket sales. Is common to do, 20, 30, 40, 50,000. It's also common for your expenses to be very high and your cash flow to be low in these type of industries as well. So this is where doing a merchant cash advance comes in. There's no credit check. So if you're a business owner right now with high cash flow, but your profit margins aren't all the way there, maybe you're running on like 30% profit margins, 40% profit margins, there is some availability with the MCA. The good thing about it is that they get better over time. So as you use them more and more, the terms of the MCA improve. You get lower interest rates, you get better repayment terms. If you're a business owner and any of these were interesting to you, if you're looking to build your business credit, I don't build business credit for you, but I have an ebook that you can tap into, $17. You go ahead and build it up to the moon. All right. It's a great way to still get access to the materials that your business needs, even while you're rebuilding your personal credit. If you're a business with high revenue, you've been in business for a year, you have 3 months bank statements that are from a business bank account, click the link that I have pinned in the comments. This will take you to an affiliate of mine. Yes, it's an affiliate link, 100%. Nothing wrong with that. They're going to do a pre-qualification for you. There's no hard pull. They only pull it to verify you. They glance at your credit. But even if you have weak credit, I've seen people get approved for MCAs with like a 580 score, and they still got access to about $25,000. So it's a great way to still get that cash infusion that your business needs, even without having stellar credit, because everything's based on the financials and the strength of the business. Y'all let me know if this was good. If you're interested in learning about even more ways to get your business funded, this is exactly what I do. Not only do I help small business owners get traditional financing, that's your SBA loans, your traditional auto loans, business lines of credit, business credit cards. We also make sure that we take care of our folks who are our business owners that are in the rebuilding stages, who may not be able to leverage that personal credit yet, but still have a solid business. They're still about doing real business and they just need that cash infusion, that extra boost to help. That's where these alternative no PG options come into play. So, found this helpful? Remember to like, subscribe, definitely check the links in the description of this video and the description of the channel. As always, my goal is to help 100 business owners get access to $100,000 in funding. I'll talk to you guys later. Peace.